Good morning, Mortgage Coach members. This is Lori Lytle, and I'll be providing you your EDGE 101 training. What we'll be doing is going through and creating a total cost analysis. We're going to create the total cost analysis for an FHA product as well as a conventional product. When we create this report, we're going to show you how to build fee templates, where you'll be able to create the fee templates in this area here. We're also going to show you how to create product templates, so you'll have your MI defaulted and items like that. I also have Wijai, who also will be hosting this event with us, and we'll be going through our EDGE account and creating the report. What I'd like you to do is log into your EDGE account, and I want you to follow along with us and create a report. With that, I want you at the end, we're going to ask you to send us a link to the report so we'll be able to review it. Just one moment, I'm putting the link in the...
So the edge.mortgagecoach.com is already in the link. So if anybody needs to get on the link, just go ahead and click on it from there, from the chat box, and go ahead and join us. Now remember, we encourage everybody to ask questions. So as we go through the presentation, if you have any questions, please type those into the question box, and we will make sure we answer those as we go. If we do not have time, we'll make sure that we reach out and answer those questions for you. So thanks a lot for joining us again, and once again, we encourage you guys to join us through the presentation.
Okay, so I'd like you to log into your EDGE account, and I would also like you to raise your hand if you're going to be following along with us and creating a report. Okay, so I see a few hands. Please let me know if you're going to be following along and creating them. Okay, so this is our home screen in EDGE. So this is what we'll be doing, is providing you the basics of EDGE and going through and creating a report. So in the EDGE home screen, in the upper section, we have client-facing report. This is where you're going to create your total cost analysis and your rent versus own report. In the lower section, we have our partner section. This is where you create your open house flyer and seller buy down. Both processes use the same templates, product and fee templates as from the clients as well as the partner facing. So even though we're creating total cost analysis, a lot of the functions we're using is the same as the open house. So just want to make you aware it's a quite easy transition. So at the top, we have our home screen, which will take you to the screen you have here. We're going to start a new client, creating our total cost analysis. If you're doing an open house flyer, you would just go ahead and click on New Partner at the top. At the end, we're going to go through our settings. With the settings, I'll be able to show you how to update your product templates and fee templates, as well as updating your contact information. And lastly, what I want you to do now is go ahead and click on that Help button. What that Help button will do is bring you to our knowledge base. And in our knowledge base, we have all our video tutorials. We have the basic ones at the top, you know, how to create a total cost analysis for a purchase or a refi, even how to key in an FHA loan. What I encourage you to do is, on the left-hand side, there's one, how to read the TCA. This will be able to get you more familiar with the total cost analysis and be able to provide you more in-depth understanding. We do have it in two formats. We have it in a YouTube format, and if your company doesn't allow access to YouTube in your office, we do have a direct download as well. Moving back to the home screen of the knowledge base, I just want to show you one last thing. We do have a search engine, so if you have any questions, like say it's one on MI, just put MI in the field, and then all the video tutorials and frequently asked questions will go ahead and display before. And then you'll be able to pick any one of those and be able to learn about that topic. Okay, so let's go back to EDGE now that you've seen where the video tutorials are, and we're going to go ahead and start our process off. So click on New Client, and once we start the report, we have 8 screens to go through, and the first 4 are just to be able to collect data. And as to just give you an idea, EDGE was created to be able to use on the phone, so you hold that conversation with the loan officer. So these fields are part of that conversation. Not all need to be filled out to create a report. And during this time, we're going to just show you the minimal amount of fields to be able to create the report. So this way you could go through quickly. As you learn Edge, you start expanding on those fields and be able to see all the different options and more in depth that Edge is. So right now we're just going to keep it basic for you. So I want to go ahead, everyone key in the first name. I'm going to go ahead and put in John. And my last name is Smith. I also want to point out at the top we have two radio buttons. One is individual. This will go ahead and give you an individual report versus a marketing report. You could do marketing reports if you want to show comparisons with MI. Just put a marketing title here. I'm clicking it back to individual. Home number you could put key in, but I'm just moving on and putting in the basic information. Does she rent, own, or rent? These two radio buttons here are the different style reports. The own is the total cost analysis. If you want to do the rent versus own, you go ahead and do press that radio button. Refer by is just capturing your referral. But the partner email address, what I want to point out here is this is a partner email address that will allow you to provide email alerts to your partner as well as yourself. So the partner email alert, if you're working with a realtor, you'd be able to, and you're working with the same borrower, you'd be able to send them an alert. So in this particular case, go ahead and if you have a secondary email address, go ahead and put that in there right now. So you'd be able to experience what the partner will receive. So the email alert will show you at the end what that looks like and how that function works. Now, friendly name field. Friendly name field is a reference name. So with the reference name, you'll be able to identify the product. So in this particular case, I'm just putting the word purchase. And what this reference field is helpful for is if you do multiple reports for the same borrower, or if you're doing the open house flyers with the same realtor, you are able to do a copy, so you're not keying in that contact information over again. So that friendly name field will identify your report. So if you're doing an open house flyer, I would just put the street address there, and that way you'll be able to identify that open house flyer rather quickly. If it's a borrower, you're doing multiple reports, you can put purchase. If they're doing investment, that particular TCA, identify it that way. Now, to move to the next screen, we want to press the arrow key in the middle of the right-hand side, and that takes you to the next screen. You'll also notice that you have two arrows, left and right, that will move you back and forth in the screen. And every time you move from screen to screen, that is triggering the save of your data. So always remember when you do any kind of input, make sure before you leave Edge that you advance the screen to make that save. So in the goals screen, we have different goals here. The only two you really have to worry about is purchase a new home, provide you the purchase screen, or just go ahead and mark it lower interest rate. This is just directly for a refinance. You'll see the other fields here. These, again, are the conversations. You want to be able to ask these questions. That way you'll be able to develop the report based on their needs.
So this is actually a great time to be able to step in and really ask why. The best thing about this page is on the lower right-hand side, you have the yellow notes section. And, you know, given that you want to get a little bit of information about the client, this gives you the ability to really ask why and create pain points or create key notes that you can use towards the end of the conversation to ask for your business. So just keep in mind, you know, this is although yes, it's either to purchase or rent, this is a great time to ask why.
Advancing to the next screen, now we're coming to our assumptions. In our assumptions, we're gathering data. We're doing a purchase, so we want to put in the property value purchase price of $250,000. So go ahead and key that information in. The other three fields are for refinances. And you'll see that you'll go through fields. You'll see red fields, black fields. Red fields are fields we need for the report. In this particular case, this field is going to be triggering our loan-to-value ratio. When you're doing a refinance, we ask for the current mortgage payment because that is something that you hold in your conversation. We actually calculate that, but this is a good place to put what the borrower is telling you. Also, original appraised value helps the LTV to cut off MI on the current mortgage. And then you have a payoff total if you wanted to key that in on a refinance as well. Moving to the next screen, we come into our affordability screen?
Now, the affordability screen is great because this is where you get to have a conversation about their financial status, whether it's income related or whether it's asset related. And as you can see, the screens, they're quite easy, and you guys do this already. So it's just asking how much they currently make. So let's do it together. If everybody could go ahead and put $95,000 in how much they currently make per year. Remember, you're able to have that credit status conversation, whether it's good, bad, or excellent. I'm going to go ahead and put good here, so if everybody could click on good. You can always ask the total amount of debt that they currently owe, or you could keep it simple and ask, what are the monthly minimum payments you're paying altogether every single month? Help them out. Car payments, student loans, credit cards, installment loans, anything like that. We can add those monthly expenses, and if we all put in $650, we can find out what their monthly payments are each month. So you get a financial perspective there, and then you get to talk about their savings balance. Their savings balance is a great time to have this conversation right here because it allows you to understand what type of down payments they are open to or have available as down payments. So definitely take advantage of having that conversation here.
Let's go ahead and put in $25,000 in the savings balance, and then I'll be able to show you where that appears on the report. Put in an interest rate of 0.25, just to be able to show how this process works in the reinvestment strategy screen. Tax bracket, if you wanted to show the tax benefit, you're able to do so by putting in the tax percentage here. We also have the ability to do the MCC tax credit. So if you do those type of loans, want to provide that option to your borrower, we do have that capability here as well. Back to the tax bracket. If you're not quite sure on the tax bracket, we do have a button here that will take you to an IRS page that you'll be able to find out that tax bracket based on their income. Our last affordability screen, again, is just a conversational piece between you and your borrower. If you want to collect this data, you could go ahead and do so. In this particular case, I just want to move through fast, so I'm going to go ahead and advance the screen and get to our product.
So now that we're in our products, now we could demonstrate what scenarios we want to show. So in the beginning, Lori went ahead and showed you that we are going to create an FHA 3.5% down and compare it to a 5% conventional loan. So in the product page, what we'll do is let's go ahead and name the product. Now keep in mind in naming the product, let's try to minimize it to 12 characters or less. So I want to just name it what we're going to show. So in this case, I'm showing FHA 3.5% down. I quickly go down the questions and answer them. Is it a refi? No, it's not. I really quickly want to point out these templates here. Spend time making sure that you have templates in play. It will definitely speed up your creating the reports. But for now, we're going to create one together, and we'll save that template towards the end. So the loan amount that we're going to use is $250,000. So if everybody could do me a favor and put $250,000. Now I'm going to take a step back and look at the line above. Is this a VA or FHA program? Yes, it is. So we do have to click on yes. If everybody could click on the percent sign next to that down payment, you will see that you now are able to put 3.5% down, and it will automatically calculate what that down payment is. We can all use an interest rate of 4.5%, and let's go ahead and put 360 months. So as you can see, we started creating the FHA product. We'll advance to the next page. And when I advance to the next page, you'll see that it provides your ratios here for you along with what their payment is. Now, this is your closing cost page. This is where you have the ability to bulk up your fees if you choose to. But for today, what we're going to do is we're going to learn how to create fee templates within each product. So the first thing I'm going to do is, this being an FHA, I'll go ahead and put my 1.75% fee. I'll go ahead and add that to the loan amount since we're allowed to do that. Now, if everybody could do me a favor, if they could see the closing cost details, everybody click on closing cost details. This is where you're able to create fee templates within each product. add any additional fees or anything like that. So let's go ahead and see how that's done. So as you can see, you have two green buttons. If everybody could click Add Fee once for me. Now I'm going to show you the difference between non-APR fee, an APR fee, paid prior to escrow, and I'm going to talk about contributions and adding a custom fee. So we'll do that quickly. So the first thing you would want to do is when you add a new fee, you will just click on the triangle and find your first fee. Let's all go ahead and hit P and look for processing fee. Under processing fee, we'll add $9.95, and let's add that as an APR. Okay, so that's how you would create APR related fees. Now let's talk about non-APR related fees. If you go ahead, you have the ability to add another fee. Go ahead and hit that triangle, and everybody just hit A and look for appraisal. Let's go ahead and type in $475 as an appraisal, and we're done with non-APR fees. When you're talking about prepaid escrows, when you talk about the prepaid escrow portion of it, you have the ability to, these are prepaid escrows, and I'm going to have Lori speak on this a little bit to explain exactly what the prepaid escrows will do.
Okay, with the prepaid escrows, if it's marked as a prepaid escrow, that means it's your escrow, it's your reserve. It's not a cost to the loan. And because on the total cost analysis in the short-term area, we show the unrecoverable cost, which is your interest and your fees. We don't want to include those prepaid escrows in that area, so this is identifying not to include it. So to set up an escrow, just go ahead and click on Add Fee. Use your drop-down, and let's type the letter H for hazard. You'll see that we have the premium as well as the reserve. So I'm going to go ahead and click on reserve, and you have a dollar amount. As we build templates, you should leave this dollar amount empty and then key in whatever that figure is for 2 months or 4 months. We also are developing our fee escrow items where shortly you'll be able to actually put in the number of months for that reserve. So we will be having that building out, but in the time period, you would just need to put in that dollar amount here. If you want to get fancy with your reserves, let me show you how to do this, and then you can also see how you can create a custom fee. If you don't find a fee within your drop-down, you can create your own fee description. So to be able to do that, click on Add Custom Fee. It's going to provide you a window, and you want to go ahead and name that fee. So let's go ahead, and I'm going to type in 2 months hazard. And you can put in reserve whichever way you want to put it in this title. We want to mark it as prepaid for prepaid escrow, and then press OK. Now that's going to be in your drop-down, and it will be toward that base of the drop-down list here. That will be your custom fees down in this area. So with this now, you have a percentage field. So you'd be able to go ahead and do a percentage in the sense of if your annual fee was 0.5, you divide it by 12, and then times it by how many months reserved. So if that was 2. I know I'm going through that verbally. If you want more instructions on to be able to figure out this dollar amount with a percentage, just email us at support. We could provide you that really quick calculation. Also, if you provide us what number you're using, that annual amount, we could provide you what that percentage would be. So we do have a way to get around it, opposed to doing a lump sum, to be able to do a percentage, to be able to give you an estimate. And remember, this is pre-GFE, so it is an estimate area. It doesn't need to be exact. You want to get exact as you can, but again, pre-GFE. So we have those two here. And now you know how to do an APR, non-APR, and an escrow fee. The only thing left we have is a contribution. And so to do that, we have 2 ways of doing a contribution. Click on Add Fee. In your drop-down, type C, and then scroll down a little bit and find the word contribution. We have a logic about behind this label. And with that, you could go ahead and put in your dollar amount. So you'll see that I have $14.70 in fees for the borrower. So say if I did 500, it will reduce that amount so you can see it right there, and then it'll apply 500 to lender paid fee. You'll notice in the paid by column, we do have an option to identify who's paying the fee. So if you would have the seller paying the fee, choose that, and then we switch the dollar amount over to the seller paid. So that's the logic behind our contribution that we automatically have in place. To do a custom one, a custom label, let me show you how to do that because it does work a little bit different because there's no logic behind it. So click on Add a Custom Fee. Let's go ahead and just put in seller contribution. You could put in earnest money too in this area if you have earnest money. What you want to do is select that it's, if you're doing earnest money, do it as a prepaid because it's not part of the cost of the loan, so you want to mark it that way. So seller contribution, press OK. You could put in a percentage if you like, and it would calculate that figure for you. See how I put in 1%, you see the dollar amount. But with this particular seller contribution, because there is no logic behind it, we actually have to key this in as a negative. This is to offset the borrower fees, and you want to keep it assigned to the borrower. So you can do a custom label, but it works a little bit backwards, so I want to be able to point that out to you. So the best way to create your fee template is to pull fee sheets from your LOS system. Your fee sheet will have your fee descriptions, your dollar amount. It will have if the fee is an APR fee or not. And you'll be able to go ahead and build your fee template this way. I always encourage people to build an FHA fee template as well as a conventional fee template. If you have any questions on building the fee templates, we also have a video tutorial that will show you how to build the fee template. If you just type the word fees in here, you could go ahead and click on that video right there. So if you have any questions on these fees, we are going to be building a fee template in the conventional, so go ahead and let us know as you start thinking about this. If you have any questions, we can answer them again once we get to the conventional area for their fees. So right now, once you're done with your fee template, we want to apply it to the loan. So with that, whoops, let me go back into it. I click on your closing cost details. We want to save it as a template first. So click on Save as Template, and I'm just going to go ahead and put in fees. And because I want to be able to show you in the drop-down, I'm dating mine, so I'll be able to see it. So if you're doing it right now, creating a fee template, even if it's just basic, you can delete these fee templates just to let you know. So you can go ahead and just label it test, whichever way you want. Also, when I show you this state field, if you're originating in multiple states and have different fee templates, you can identify it by that as well. So once I press OK.
So I just wanted to take a quick second, and it was a great question. So if you'd like to show origination fees, you can also show it as an origination fee. If you choose to use it as a percent sign, you'll have to create a custom fee and type vendor fee or whatever it might be. And then when you hit OK, you'll see that you're able to add a percentage there. So it's your choice on how you'd like to do that. That's a great question. Thank you.
And the reason for this, the percentage field, why it's grayed out, just to let you know, we do have the option to add your fees to loan amount. And because of this, you're inside the screen, and your loan, they have not been added to the loan amount as of this. I know this is a little complicated, but trying to explain why that's grayed out. So if you use that percentage field, just remember if you're adding fees to the loan amount, they haven't been added yet. So, but if you're doing a purchase, you're pretty much set, and you can use that percentage sign. So give you an idea how that process works. To remove a fee, just to show you how that works, just hit a trash can, and that takes it away. You'll notice up in the upper right-hand corner, I have my fee template. I saved it, and now it's in my drop-down. So you'll be able to pull that for any future loans. You can also pull a fee template down. If you have a different product and you end up changing a couple fees, you can then go ahead and save it as a template again, and now you have a new template. So that's a quick way of building templates. We also have that in the settings screen. once you're done with all your fees, you want to go ahead and let's actually, for reserves, let's put $600 in there for tax reserves. So once we're done with our fees, you want to apply to loan. You'll notice now that the fees total into the APR area, prepaid escrows, non-APR fees, contributions, and upfront MI. We also have a field for points. You can also key in negative points if you want to be able to use that for your contribution area. And if you hover your mouse over, it goes ahead and shows that dollar amount. Prepaid interest days, I'm going to go ahead and put in 15. This seems the norm, what everyone quotes. Put in whatever your company requires, 15, 30 days. And this is part of the default as well. So last thing on the screen, you'll see how the fields are grayed out. And that, if you need to make any kind of changes here, just go to closing cost details, make your updates to your fees, and then it will apply to loan, and it will update these gray areas here. Okay, moving on now, our last screen for our product, our monthly cost.
So this is where you can put your monthly cost in. This being a purchase for an FHA, we have a few cost input here. So I'll recommend everybody clicking on the percent signs, and let's click on the insurance. Go ahead and put 0.2 and tab over to the property taxes. Go ahead and put 1.25 on property taxes. Now with an FHA, we already know that the monthly mortgage insurance is 1.35, so if everybody could plug in under the mortgage insurance 1.35. Now, a few things you'll see that we have to adjust. You have the ability to remove the 78% LTV cutoff and go ahead and add that it's for the 360 months. I want to also make sure you guys check on government loans, the calculate MI on balance. And so with an FHA, this is how you would create the FHA. Now, I want to go ahead and save this as a template. This will allow you guys to use this template going forward for any additional FHA templates. So if everybody could hit Save Template for me. The product name came through. If everybody could date it for today's date. And once you've dated that, go ahead and hit OK.
So now you've created your product template, and I just want to touch base on the monthly cost screen. If you're in an area where these percentages are constant, you could go ahead and get these defaulted as well. So you'll see that when we go into our template in our settings button, and you'll see where you can get this area defaulted, and of course the MI is going to be defaulted as well.
So let's go ahead and take a quick second and add a second product because we're going to compare it to a conventional loan. So if everybody could hit add a new product or add another product. Same thing, once again, let's go ahead and rename this. So instead of saying product 2, go ahead and put conventional 5% down. Once again, I will encourage you guys to take time to create your fee templates. In this case, that we're going to create this quickly together, but I once again recommend creating the templates. This is not an FHA or VA loan. We used $250,000. We're going to put 5% down. Let's go ahead and put 4.625 on the interest rate and put a 30-year term on that. Once you've done that, let's go ahead and advance to the next page. We should have now advanced to the closing cost page. Once again, we all can bulk up our fees, or once again, take time to create the fee templates, help us out, and making sure that we can speed things up and create these fee templates. In this case, let's use the fee templates that we created today. So if everybody hits fees with today's or with yesterday's date on it, go ahead and click those and bring those over. That's how easy it will be once you created the fees. So go ahead and once you've done that, just apply to the loan. And as you can see, there are the fees all plugged in. Now all we have to do is plug in how many prepaid days we're going to account for. And once again, if you have additional points you want to add there, you could. Here are the days and interest, and we move right along. We get to the taxes and insurance. A few minor changes we're going to add here. So once again, let's go ahead and estimate these taxes and insurance. Now for mortgage insurance, go ahead and put, for conventional, go ahead and put 0.9 for now. And we are done. We don't have to calculate the MI on balance. That's only for government loans. And we don't have to have any MI cutoff months. So with this 5% down, we now created another template to be able to use. So if you'd like, let's save this template. Let's date it for today.
16th.
And we could now have two templates that we created, an FHA and a 5% down. So we created the two products. As we move along to the next page, we get to the analysis summary page. This page lets you see the differences in immediate differences, short-term differences, and long-term differences. Now, all those could be adjusted by the upper left-hand side. I want to bring your attention to the top portion. The property appreciation rate is set at 3%. I definitely recommend you look at your local area, find that appreciation rate, and make that adjustment. The short-term analysis is the gold section. The long-term analysis is the green side. Now, I just wanted to point out that the short-term analysis in months is changed in months. So the gold section, as you can see, is defaulted at 60, 5 years. Just know that you can change those up or down in months. Now on the long term is adjustable or changed in years. So you're able to change these up or down in years to show any type of impact throughout the process of their current loan or their new loan, proposed loan. Now I wanted to point out the benchmarks are always saved to the highest default, or they always start off at the highest default. As you create more and more of these, you will be able to see that you'll be able to distinguish which default you want, one versus the other. But for now, we're going to go ahead and leave those at highest defaults.
Can I step in real quick? With the highest default, the default is the highest payment. We always default to the highest payment there. So that's what it means in the default area. So, and then when you have a refi, always make sure you have the benchmarks pointing to the current mortgage.
So I want to touch base on the green section really quick, because the long term, yes, I told you you're able to adjust that in years. I want to make sure you guys can see that you can show 3 different types of options or scenarios to your clients with a matter of just clicking on it. So you're able to show total principal paid, total net worth, and total interest and MI paid. It's always defaulted on total interest and MI paid because that's the most commonly shown scenario. So let's go ahead and leave it on total interest and MI paid. The last thing I'm going to quickly cover on this page would be the adjust reinvestment strategy. If everybody quickly can click on the adjust reinvestment strategy, this is a great tool to help you be able to describe how to pay additional payments into the mortgage to reduce the mortgage term years. Or better yet, talk about reinvesting into a savings account or being able to talk about investing into maybe a higher rate of return, maybe an IRA account or a financial planner, and show them if they were to invest a certain amount, how much they would generate over that same period. So just wanted to point these out to you. Anything else you'd like to chime in, Lauren?
Yes, I just want to be able to show you. This is where the savings balance carries through. You'd be able to see the cash to close, how it subtracts out and provides you with the starting balance. So you'd be able to use this as well as the savings balance. We do have a great video tutorial that describes the reinvestment strategy further. I encourage you to look at it because if you click on this button here, just to show you, you can reinvest MI in here, also provide a one lump sum payment. So reinvestment strategy screen, great piece to learn. Good video tutorial on it, email support if you want any other kind of information on how to use this. So I'm going to press OK, and we're going to move back out to the analysis screen.
So let's go ahead and go into the contact info page. This is some data collection page, whether you want to talk about and input the email address, phone number, fax, and CoBar's name. But really definitely take time to add the property address. If this is a refinance, put the property address. If it's a purchase, go ahead and put to be determined, but put what city and state they're looking to go into. Definitely what this portion of the inputting page will definitely show up on the report. So for now, if everybody could go ahead and put to be determined, since this is a purchase, and go ahead and put the city that you're currently in, if you'd like, or a city near you, and I'll show you what that looks like on the report. So once again, I just wanted to make sure data fields, if you have a CoBar, if you have fax number, anything like that, be sure to plug those in. So as I get to the presentation page will allow you to decide what you're going to show. Remember, you have the opportunity to show a seller buy down or an amortization schedule. 99% of the time you will be showing a total cost analysis. So we can go ahead and leave that checked right now. I want to bring your attention to the middle part of the page. The two products are checked. That's illustrating to the system or letting the system know that both items will be on the report. If you choose to exclude one from the report, just uncheck it. I'm going to have Lori come in real quick and talk about the payment notes.
So in your payment notes section here, it's a compliance piece. So what you would like to do is put in estimated taxes and insurance are included in your payment. So let's go ahead and type that, estimated taxes and insurance are included in your payment. And I spelled payment wrong. There we go. So what this is going to do is provide double asterisk on your payment on the report, and this text will print below the summary section. So we'll show you where this area is. You also have a little bit little space here if you wanted to type any kind of additional information. When I create examples, like I have a total cost analysis where I'm comparing just MI, I'm not showing fees because I want to show the effect of MI and rate. So I could then go ahead and put something in here, purposely excluding fees. This report is comparing MI only. So you can use that little note section, just to give you a little heads up on that area.
So we're going to go ahead and advance to the next page. Now there is a question regarding interest-only loans. We will definitely touch base on that question in just a second. Let's go ahead and finish this presentation, and then we'll make sure you're aware of where that change or where that adjustment is being made. So thank you for that question. But as we move along, I want to make sure that you see that in between these two pages, I want to make sure you guys are aware that there is an overview of the immediate impact. If you decide to provide any type of notes or change your notes, you can do that at this time. There's an overview of your short-term and an overview of your long-term. So once we click to the last page, you can see that there is no longer an arrow key here, only to the left. We are now to the end of the presentation. This is where you determine how you're going to send out the report. Now remember, you have the ability to email this report, print it, or save as a PDF. I want to make sure that I point out that when you email this link, your client gets to print it or save it if they choose to. On the lower right-hand side, you'll see those two print and save buttons. Now, I recommend you email this link, and the reason being is every time your client views it, we will notify you when the report's been viewed. I want to take a quick second and show you what that notification looks like. So keep in mind, anytime your client views your report, you're notified in two different methods. You're notified by email, and if you have the RateWatch downloaded on your desktop, RateWatch also alerts you, and you'll see what RateWatch looks like, the bottom portion. The email looks like the top portion. So wanted to make sure I took a second to illustrate how you will be notified when the report's being viewed. And so definitely take advantage of emailing that link. I want to make sure that I point out that for any purchase related loan scenarios, if you decided to include the realtor's email address in the client section at the beginning of the presentation, remember, make sure that you check on this section or this box here. This will allow your partner realtor to also be notified when the report's been viewed. So just make sure that if you do have, if it's a refi and you have your transaction coordinator's emails on there, make sure you click it. Your transaction coordinator's email will be notified, and so they'll be on top of that file as well. I'll mention really quick the quote date. Make sure you protect yourself, just providing the day you actually quoted this loan. So for today, today is the quote date that we're going to use, so we'll click on today's quote, or today's date. So now that we've created the report, we've covered ourselves by providing a quote date, we know we're going to email it, let's go ahead and email it. So if everybody could do me a favor, I want everybody to click on Generate Link. Now Generate Link is where you get the opportunity to copy and paste the link, bring over an email, and send this out to your client. So I'm going to have everybody do that together with me really quick. So for those of you guys, I see a lot of hands were up. So if for those of you guys joining us, open up an email. Go ahead and do me a favor. Put in the to section, put it to support@mortgagecoach.com. If you took the opportunity to type in an additional email address, whether it be a secondary email address or your own email, whatever it might be, on the client section, go ahead and send that, CC that other email address. I want to show you how you get notified both ways, okay? Now in the body, just go ahead and put total cost analysis. And in the body, just copy and paste that link. Now once you've copied and pasted that link, go ahead and hit send. Our support team is waiting to take a quick look at your reports and provide any feedback. I do want to mention our Edge Live. Our Edge Live, whenever you're dealing with your client and you want to interact and make any changes on the go or make any highlights or anything like that, Edge Live allows you to do that. So keep in mind, you'll see that if I click on something, it actually clicks for the client and highlights for the client no matter where they're at. If I decide to open up any pages, it does the same. So I want to strongly recommend you guys taking a look at using the Edge Live feature. It's a game changer. You guys will love it. So really quick, let's go ahead and really explain the total cost analysis, and I'm going to bring Lori in to help us do that.
So with the total cost analysis, we have it in 4 quadrants. So in the upper left-hand corner, you have the summary. You'll notice the quote date as well. You have the payment stream at the base of each of your products. So if you click on the payment stream under the FHA, and I also want to let you know I did put the link to this report in our chat box. If you click on that link, it will open the report, and you'll be able to see exactly what I'm doing, and you would experience that Edge Live experience that which I was talking about. You'll be able to see everything I'm doing. So if you like, click on it, and if anyone clicks on that link, you would know because in the lower left-hand corner, right now it says 0 viewers. As soon as someone clicks on a link, it will then start counting up 1 and 2. So this way you'll be able to know if your client is on the report and viewing it with you. So this is a good look. So right now no one's looking at my report.
So I really wanted to take a quick second and see, there you go. Guys, ladies and gentlemen, this is really powerful for you guys to see. So if for all of you guys who have 2 monitors, take the quick second and click on that link that Lori put on the chat box. I want to make sure that you guys, each and every one of you guys, gets to see the Edge Live in action. This is what your client gets to see. So this is a great time to see that perspective. Everybody, if you have 2 screens, definitely jump on board and take a quick look.
Okay, so in our summary section, going back to our payment stream, when reports come through the support, this is one thing I always look for, and it's a good quick way for you to check as well. So if you click on the payment stream, you'll be able to see that I have carried a payment stream for 30 years. This tells me I have my MI correct. If I click on the conventional loan, you'll see how it doesn't carry for 30 months. So that's one way I'm able to tell if the mortgage insurance has been keyed in correctly into Edge. So now let's click on that More Info button in the summary area, and this is where you get your details. You have your payment breakdown, including your price or your value of the property. You have your P&I payment. If you had a second lien, it would show the P&I for that as well. You have your monthly cost, and then the total petty payment here. If we move to the closing cost tab, you have all your fees listed. You have the down payment, or if it's a refi, the equity. You can see your loan to value ratio as well. At the very base, we have the details. So if you click on the fee detail button, you'll be able to see the list of itemized fees, including your prepaid interest. Now moving to the reinvestment strategy tab, you'll be able to highlight if you put any kind of reduction of payment. You want to go ahead and highlight that so they'll be able to easily see that, as well as that freedom point. So you can also highlight within these screens. Moving to the monthly payment savings, if you click on the More Info, you have information about the payments for each product. And again, if you have a second lien, that information will appear below. You have your property appreciation rate printing here, and if you had a tax bracket, you would be able to see that as well. Going to the lower left-hand corner, this is your short-term savings. So if you click on the More Info button, what the short-term savings is doing is comparing unrecoverable costs over the 60-month period. Unrecoverable costs is your interest in MI as well as your closing point. So over that 5-year period, you can see how much interest and mortgage insurance is being paid for each product. Then once you add your fees, we then do the comparison. And so that tells you right there that the conventional loan is saving a little over $9,000 over the FHA loan for that time period. So I want to definitely bring your attention to that. It's not 114 times 60. It's the unrecoverable cost, and that's what we do our comparison with. Now lastly, we're moving to the lower right-hand corner, which is our long-term savings. So if you click on More Info, yes, I'll show you the live benefit shortly because I wanted to change these numbers. And the live benefit is incredible. I tell you guys, definitely you want to use it because it's going to help your conversation with the LO so much. I mean, with the consumer. So now we're going to the long term, 15 years. And here you have that home value. This is where the property appreciation rate comes into play. So it'll be able to show you how much it increases, that 3% over the 15-year period. Also provides you that loan balance, so you'll be able to show that at the end of 15 years how much they still own the loan, how much equity they have, and how much total principal they have paid. So this gives you a little bit more of the details of the loan.
So I want to jump in really quick and answer a few questions at the same time. So I want to answer the questions of how I can show an IO payment or an IO loan, but can I use Edge Live at the same time? And the answer is yes, guys. If you have the client on the phone, you don't have to hang up, create a new presentation and email it to them, get them back on the phone. Keep them on the phone, keep the presentation open. The only thing you have to do is tell the system what you want to add. So if we understand that the client wants to see a new product, I'm going to go ahead and show you a new product, but I want to show you the copy from feature to make this a little easier for us. So let's just say that our product is a let's just say
fixed IO.
Yeah, fixed IO.
And then we'll copy the fix.
Yeah, fixed IO. Okay. We'll go ahead and copy the conventional 5% down. This will bring all that data over. Now, if this was fixed for, say, 5 years, all we have to do is put 60 months, and the system will calculate the first 60 months as interest only. But let's show you how fast we just created this report. I updated the system. For the one person that's viewing this system gets to see this live instantly. So for the one person that's viewing this, thank you very much. You'll see that that loan was actually created for you while you were on, and you had that experience real time. So once again, that was just giving you an example of creating an interest-only loan, but making sure I touch on the benefits of using Edge Live.
And definitely, we go into this a little bit more detail on our Thursday trainings, but show you that little bit. It's great. You could go and change the interest rates, any type of thing, wanting different down payments. Edge Live is the way to go speaking to your consumer. So now we've finished all our information here. We've finished our report. So what I would like to do is now go into the settings and show you how you'll be able to modify this template. Click on Home. That just brings you back to the home page. Click on Settings. Settings brings you to the Contact tab. You want to make sure all your information is correct in this area. If you make any changes at all, press the Save button in the lower right. If you need any changes to your first name, last name, you will have to email support, and we'd go ahead and modify that for you. Moving to the Image tab, you'll be able to upload your image as well as your logo. If you're on an enterprise account, the logo might be locked down, and you'll see these buttons are grayed out. Moving over, we have the fee templates. These are the fee templates we've created. You see I have quite a few in here. With this, once you come into the fee templates, you can always do any kind of modification to the fee templates itself if you need any fees that were updated. You can also come in here and you can do a save as, and that allows you to do a copy. So this is another quick way of building your fee templates, and again, just get a fee sheet, FHA conventional, and be able to get that, build up your fee template. Moving to product templates. So let's look for the one on the 16th. So we have that. You can name it whatever you want on your template name. We have the down payment defaulted, per diem interest defaulted. We have a defaulted for yes of FHA. I'm going to go ahead and remove the interest rate because the interest rate is pretty much variable. Even if you left it in, you can always override that figure if you need to. Term I'm leaving, and then if you notice at the base you have your upfront MI is already defaulted. You'll see the fields in gray that defaulted for fees. So let's go into the closing cost details. You can combine those fee templates with your product template if you like. So you have the option to do that here. Monthly cost, if you click on that, you'll be able to see the monthly cost for MI. If you're following along with this, you can always update your hazard and property tax or remove those figures altogether. And as remember, the percent sign and dollar sign that you see in the center is just a toggle back and forth between the different fields.
So as we wrap this up, I want to make sure that I point out a quick feature that for most of you guys, that if you haven't seen it yet, I want to bring it to your attention right now. Remember, ladies and gentlemen, we do have a mobile app that will allow you to do the same exact functionality on it. So I want to bring up my phone real quick, and everybody should see my phone. I want to take a second to talk about how we could deliver this message to our clients faster, more mobile. And whether you email this to yourself or whether you text this to yourself, your client has the ability to just quickly click on the text that you provide or the email you provide, and as you can see, it opens up the report. Now, I want to point out a couple of things. First and foremost, there's a disclaimer, just letting you know that it's just a quote. But I want to make sure you guys understand that as I make any changes, you see that or any highlight, it happens for the client as well. So I'm going to do this real quick, and I'm going to put it on top. And I'll show you that as I highlight certain things, I want to make sure you guys see that it's interactive, not just from a desktop perspective, but your mobile app or your mobile phones, iPads, Androids, get the same experience. So if you text this to them, if you email this to them, you're able to open that experience and drive that experience from your mobile platform. Really powerful to be able to reach your clients at any time and be able to provide this message. So I wanted to end the conversation on take the second to email this to yourself. Take a second to text it to yourself. If you don't have the mobile app, click on that email, click on that text, enjoy the consumer experience. This will allow you to be able to better maneuver through the system and relay that message as well. So really wanted to touch base on showing you the mobile app. We will definitely be able to touch base on this a little later.
So got a little bit extra there showing that mobile app. So this was an intro class. We showed you how you do your product, your fee template, how to create a report. I encourage you to send us a link to the report. We can review it. Make sure you have your image as well as your logo and address loaded. And lastly, I just want to bring you to one last area. In our support box, we do have, we recorded this call and we posted in our coaching call archive. So if you click on the help button, go to our knowledge base at the top here, click access to our coaching calls. We host Tuesday coaching calls, having a leading expert in the industry come and talk, and we also have our Thursday training calls. Thursday is a great way for you to learn more about EDGE. We dive into it further, create different scenarios. We answer questions during this time, and if you have a particular report you want to create, let us know. We'll create it during our Thursday training. We also have 16 strategy events that we are doing that are held on Wednesday. If you want more information on that, email us at support. And what we do on those is we've already gone ahead and done the mobile strategies, best practices, going into EDGE and RateWatch, be able to do that. And then you'll be able to see, going down the list here, all the various coaching calls. We have our Thursday training calls as well being posted here. So we have a lot of detail that you'll be able to go through and learn from EDGE. So with that is, thank you very much for attending the EDGE training. Use support at mortgagecoach.com with any kind of questions, as well as our knowledge base here.
Once again, everybody, thank you for joining us, and we'll see you next week.
Thank you.